Hello and welcome to Market Movers. My name is James Boyd, and there is the closing bell. Adrian. Okay, that's maybe what it feels like for some investors out there as they saw maybe some red go across the screen here today. We'll talk about that as we talk about what are some of the things that move the market, where are kind of some of the moves now as we set up going into next week. Now, today I'll really be focusing on kind of looking at monthly returns, year-to-date returns, and kind of what's holding up better than other areas. Now, just real quick, today's date, January 10th, 2025. Hopefully you're inside where there's nice weather out there. You're inside. I live in Salt Lake City and it's a little colder, but I mowed my yard yesterday, so it's not that bad. Hopefully wherever you are, there's some nice weather. Some of you in Texas area, maybe not so much, stay inside. Now, just real quick as we get started, you can follow me on X, my handle, James Boyd CS. We also have Brent Moore's in the chat. We welcome him. We got Eva, Ray, Ricebird, David, John, Life in the Fast Lane, and many others. Welcome to all. Now, just real quick as we get started, this will be like a conversation, kind of what we're seeing in the marketplace. It always helps to have not just one set of eyes, but many set of eyes. Okay, so kind of tell me what you're seeing as well as we look at a number of charts. Now, the information provided here for general informational purposes only. Specific securities used to demonstrate analysis were selected randomly, right? From some indexes, etc. Also, remember when we talk about options, they carry a high level risk, not suitable for all investors. Also, when we talk about examples of stocks or options, those will be done on the software application, the Thinkorswim desktop. And also remember that investing involves risk. Now, we want to kind of talk about the general trends. I want to talk about the market as far as monthly returns, year-to-date returns. Is it as bad as it's been for the month, or has it just been lower for the month? Okay. I'm going to talk about kind of what areas we saw kind of held up better for the week. I've kind of talked about some bearish trades. I want to talk about some ones that kind of bounce back a little bit going into the weekend. And also, I'm going to talk about some ideas, some of the news items that happened this week that could impact portfolios that happened this last week, but also as we go into next week, what do we need to know? Now, first off, what I want to do is let me just bring up briefly, we have right here, and I'm just on the market watch, okay? And I'm on the quotes. Now, by the way, I had a question regarding, how do I get the columns? Well, if you go to my X page, you'll see them listed at the top. Row by row, you can really pick what you want, and the code in blue is the script. You could just go up to the very top, go setup, open shared item, and then type in what you see on my X page. So you have to do that manually. There's no way to copy and paste. The hard thing for you to do is just really type it in, okay? Remember, it is case sensitive. Now, one thing I want to kind of show just real quick is if we take a look at the 1 month, okay, the VIX, not nice, right? When you see the VIX at 36%, you see the SOX on a 1 month return of 0.27, NASDAQ down 3, yen down 3, S&P down 4, Dow down 6, and you're going to see the Russell down 9.5. Now, why am I kind of pointing this out? Because where's the destruction been, right? Is the destruction really in the year-to-date return? It's only down 0.6% for the NASDAQ. It's down 0.7% for the NASDAQ year-to-date. Down 1% for the Dow. It seems like a lot more than that. And then you look at the Russell down 1.9%. So the kind of the bearish trend was really hitting before the year started, okay? So that's kind of something important to understand. And when we look at the trends from the indexes, they are still in trend ones. Now, a little of the damaging thing that we don't like if we're bullish investors, the trend is looking at the daily chart, okay? And when we look at the trend weekly, we kind of see some darkening clouds, if you will, of trends 1 and 5. That is usually not the bullish investor's friend, okay? Let's just be honest here. We don't like to see that. We want to see 2s and 3s and maybe 4s. So having an understanding of protection and exiting and maybe bear strategies If you do bullish strategies, as we echoed on Friday multiple times, defined risk, defined risk, defined risk, and also understanding you don't have to do a full position size, okay? Now, the one thing I also want to kind of point out here when we look at these charts just quickly, when we pull up, let's say, these charts, the Dow did finish, okay, below the horizontal support. Okay, that's what it looked like, okay? Now, when you take a look at, let's say, the SPX, what you're now going to notice is it did finish also below the horizontal line as well and near that intraday low on the second. Now, here's the thing. The market doesn't drop forever, okay? Eventually you get some type of tradable bottom. But when you really look at this, I mean, was it massively down for the week? Not necessarily, but it dropped, okay? And when you look at the, let's say, the NASDAQ, you're going to see that did take out the low. And then obviously, as we expect, because we saw the list, the Russell did take that out. Now, the low, that is. We talked about the VIX earlier today, okay? We did an example on that. Join us for that ETF session, live only. And you're going to see that that did finish at 1961. Now, remember, I like to think about the VIX as the fear gauge. I like to think about it as the blood pressure of market participants, okay? And so the biggest thing is, if this is going up, people are becoming a little bit more nervous and or protective. That means they might want to hold on to some more cash. We did see the US dollar, and I've said this over and over again, and I don't want to toot my own horn, but I don't think anyone's talked more about the US dollar than I have, okay? And if you look at the US dollar, notice the relationship to that 10Y, and that 10Y hammered a brand new high here today. Now, that really hurt some of the financials here today, and we'll take a look at that. Because what happens is, as the rate goes up higher and higher and higher, and people want to buy a car, people want to buy a house, and so on, they might say, I can't afford it, okay? 8% for a car, 7.5% for a house. Where's that? I mean, I'm not willing to make that payment at those levels. And so they wait for the rate to drop. So the biggest takeaway this week is when you look at the macro data, okay? And I want to kind of make sure we explain something. The world, I remember it was probably 15 years ago, I realized it wasn't all about technical analysis. And it hurt my feelings initially, okay? There's something called intermarket analysis, which I think we could just do a class on by itself. I think intermarket analysis, correlation, is some of the most interesting analysis out there, okay? Below that, macro analysis. When we look at macro, we're really talking about the U.S. economy. And we're looking at metrics on how the economy is doing. How the economy is doing affects companies. The companies have stock symbols, and so we're wondering about the economic health of those companies that are being affected by the economy and the rates and so on, policies. Now, if you take a look at this is very important. We are on Schwab.com. We're going to go to research, and we're going to go right to where it says calendar. Now, if you click on calendar, what you're now going to notice, and you need to see this because we got a lot going on, we're down on the economic tab. Okay, so I click on that, and here we are, and I'm just going to click on this January 10th. Now, what this is going to do is it's going to show us, and I just want to recap some of the things we saw this week, good and bad, okay? So when we look at, let's say, the services number, which came out on Tuesday, quick recap, the forecast was 53, we got 54. If we get anything greater than 50, economic expansion. You might not feel that, but overall the number is showing expansion greater than the forecast. Now, when we look at the JOLTS, this is known as the job openings. A lot of people might not look at that, but this is kind of key to kind of see what employers are thinking. By the way, when I say employers, I'm also talking about the strategy, the willingness to hire from the CEO's perspective. Are they willing to have new job listings? 8 million compared to a prior of 7.83. That was on Tuesday. So job openings were quite a bit higher. When we also take a look at oil inventories, they shrunk, okay? You're going to see nat gas inventories. They shrunk. That kind of played out on the crude oil chart and the natural gas chart. And when we take a look at, let's say, even mortgage applications, as the rates went higher, you saw a drop there still. And then when you get into today, kind of important, we look at the non-farm payrolls. They were expecting 165 and they ripped, 256. You actually thought it was a typo. Okay. Now, you don't normally see that they're off by 100K or near there. That could be revised down, but a big number. And so what that has effectively done is made it where the Fed might not be able to cut. Bank of America actually came out today and said, we thought there was going to be 1 or 2 rate cuts. We now think there will be no rate cuts. That might mean that the interest rate that we actually have might stay higher for longer. And that's kind of also interesting where the Fed thought, hey, we're going to lower the rates. And the bond investors, fixed income investors, they said, we think you're wrong. And that's been kind of something interesting to kind of see who was right. It kind of goes back to the bond investors were right. The Fed was lowering, but the bond investors were right. They actually said, no, we want a higher amount of return for that maturity. It's kind of interesting how that plays out. Sometimes the Fed is wrong, okay? So keep an eye on that. So the biggest takeaway going into the sector space, okay? So if I pull this up, so there's a question on this 6J. That's the Japanese yen. I compare that to the international VIX. If the yen is going up aggressively, that would not be good for equities. The yen is a borrowing currency or one of the borrowing currency because it actually has a lower interest rate. You're borrowing the lower interest rates and trying to borrowing the lower interest rates and trying to get a higher interest rate, like the US dollar example given. And so we kind of use that as a gauge of broad fear. We don't see that right now. See the market going down, but not real panicking. Now, if we take a look at the sector just real quick, kind of some of the differences here. Notice the difference between the monthly returns and the year to date, okay? Oh my gosh. Okay. Let me kind of show you something, okay? And Brent, by the way, Brent, could you do this? You did. First off, I love well, let me say it like this. I have studied fixed income a lot, okay? Fixed income is very interesting, okay? Some people might not think so, okay? It just depends on what you have, okay? And kind of what you want to do and what you need. If you just real quick, and let me just kind of do this. Let me kind of just do a, let me double click this so I can kind of duplicate that. And hello, for many of you in the great city of San Diego, we welcome you. I'm sure that Ben is taking care of you with Kevin Horner, Ray Kimbrell, and Scott Durfee. Welcome to all. By the way, many of you that are joining in San Diego, Ben will normally be teaching this Market Movers on Friday. So just know that you don't have to only have Ben there for the workshop. You can join him on this webcast on Friday. So we welcome you all here in San Diego. This is a session that is live and recorded. Okay, so just real quick, I want to kind of show you something. If we go, let's say, to the trade tab, and what you're now going to see is if we go to that section, let's say bonds, we could just say fixed income, right? And if we click on that, let's say fixed income, I would like to see, for example, if it's closed, but this is where you're going to see the overall page of different types of fixed income products and maturities. Brent, if you could you go ahead and send the link to the class that you did on that topic? That would be very interesting. And that was the most recent class that you did on that topic. That would be great. I think people would really enjoy that, okay? Now, what I also want to do is I want to go back to something just real quick. And I want to kind of pull up, before we look at individual sectors and stocks, okay? I also want to kind of go to the second tab here where it says earnings, okay? So the one thing that we talked about last week is you want to know what's coming up on economic data that's coming out, which the first week of the month is always important. First full week of the month, okay? And we saw that this week, how it played out. Not massively bad, but it just pushed the indexes down 1 or 2% for the most part, okay? Now, coming up, let's go to the earnings tab. If we go to the earnings tab, what you're now going to see is I'm going to go to the date. I'm going to go right to the 16th. Now, usually it's the Friday where we actually start to see some of these companies coming out with earnings, okay? It usually is the Friday. We're kicking off on Thursday, and you see some companies like United Healthcare, Bank of America, Morgan Stanley, PNC, US Bank, and so on that are, for example, announcing next week. Now, sometimes for some investors, this might be kind of a catalyst for a kind of a look into the sector and or maybe some individual stocks. Maybe you're tracking the trends of those, or you're tracking maybe what the volatility is doing and so on, and volume, okay? Now, the biggest actually thing is, I'm also going to go and take a look at, let's say, the 15th. It's actually, if you look at the bigger ones, you're going to notice that these other financials are kicking off on Wednesday, okay? So the financials really here, they're normally on Friday, they're kicking off on Thursday. Tuesday, not as much. And if you look at, let's say, the 13th, Monday, you only have KB Homes. Guys and gals, you need to be watching some of these earnings, okay? It's not all about technical analysis and just looking at the trend. The macro environment can affect the fundamentals. The fundamentals can affect the technicals. This is not individual. They can correlate to each other, okay? Now, let's kind of talk about some of these sectors real quick. When we look at the sectors, IXE, energy, and then down to real estate, what you're now going to notice is when we look at the trend, okay? So when we look at the trend, we still have energy leading, and the second area is in that trend too, okay? The healthcare space. Now that's different than last week. Now this last week we talked about Cardinal Health. We also talked about UNH as well. Those are the two I can remember that we talked about. And so then from there, you're going to see that the S&P, the benchmark, okay, we'll kind of rank that on a percent in just a sec. But you're going to see that when we look at the trends of the other sectors with real estate at the bottom. So how do interest rates affect sectors? Well, I think you could see it now, okay? So that's why we keep an eye on that, because that has a correlation to what some sectors might do. When we look at the 1 month returns, it's energy and healthcare, then the S&P 500. The worst, real estate and materials. And the one that is a little surprising to a degree is Staples, okay? Staples has been something I've been watching, like, you know, some of these Mondelez, Pepsi, Coca-Cola, and just kind of watching them as they come down. And remember, if you have rates going up, some investors might say, I'm just going to do a fixed income product. I'm not going to buy something that has maybe as much price risk. And maybe, potentially, what if they cut the dividend? Okay? So the biggest, now, I'm not saying they're going to, but that's a risk. Okay? So little different there between a dividend paying stock and, let's say, a fixed income product like a T-bill. The other thing, when we take a look at the year to date and kind of said massive sell-off, I'm not sure if you say massive sell-off. You're going to see that real estate, Staples, financials, they're down 2.5%, 3%. So not major, but we are seeing some red tape on those sectors. Now, what I want to do is I want to kind of talk about, just real quick, some of the stocks that for kind of getting into the tail end of the week are holding up a little bit better. So let's take a quick peek, okay? Now, when we take a look at this, I'm going to go to Home Depot. Home Depot, if we look at this and say yesterday was the low, kind of Home Depot fired back. That's one that did not end up near the low. That kind of held up. Could the jobs numbers be helping that space? People have money. Are they willing to spend some of it, maybe on a home renovation or just some slight projects? That's one that kind of held in there. Chevron, we did a paper trade on that last week, and that's one. Now remember, keep this as simple as possible, okay? So when we're talking about looking for bullish examples, right? When we see these red lines on the moving averages here, sellers are in control. Now, if you're in the stock, you kind of feel like, why didn't I get out? That's kind of what it feels like, right? Then when the stock shows the green on the moving averages, this is when you're saying, geez, why am I not in the stock? Or I'm glad I'm in the stock. Now, it's not a recommendation, but I'm just saying that's kind of maybe some of the emotion that you can feel. Now, what you're going to now notice is the chevron, we've been kind of talking about a couple of these, is been holding the 10-period moving average. Interesting. And it's been one that's kind of been bucking the trend of the market in general. Okay? I'm going to come to Meta in just a sec. Okay? Because that's the one, I'm glad you, Robin, who is that? Robin? Okay, good. Now, if we go back to also Walmart, okay? Now, I think I've been in Walmart one time in like the last 3 years, and it was like the blast from the past. Okay. Felt like they should be handing out tickets. It was like an amusement park in there. It was so interesting. Okay. So anyway, if you take a look at this, we did see kind of the crossover, and so far it's actually holding the 10, and it got a little pop here today. Now, it got the pop when other things didn't get the pop. They got popped down, okay? So Walmart getting a little push. Cisco is actually holding in there. When its cousins in the tech space, Oracle among others, they've been dropping. Cisco's been holding. Why is it holding? Apple, for example, dropped down, but where did it drop down to? Well, it's dropped down to that 231 support-ish area, okay? Now, some people like those drops. They say, come on down, okay? Come on down and knock people out of those stop losses. Come on down to those support levels. And, again, it goes back to the selling doesn't last forever, okay? It doesn't tend to, okay? Sometimes you can get these 5, 8, 10% pullbacks, and those are just healthy corrections in an intermediate to longer term trend. Now, if you take a look at this on a 3-year weekly chart, this is nothing really new. You could even argue it's bull flag-like. And the biggest thing, if you take a look at this, it's pulled back probably on a percentage basis more than we would like. But on an intermediate to long term, nothing unusual here. And the earnings coming up on the 30th. Okay? So these are going to be things that if investors are truly bearish, they got to hold the bearish positions, or they might hold them through the earnings. Some bearish traders don't like to hold through earnings, which means they might exit those positions if they're short, or exit those positions if they have options, and if they exit, it might cause a little bit of bounce. Keep an eye potentially on Apple. Speaking of retail, Costco. Okay, now Costco was the one that we did an example on. We showed the example of holding over earnings. Now, I mentioned this one the other day that this is the one that was kind of potentially forming, which we had to be a little careful of, the the head and shoulder. And we were kind of like right there. This today is with the little pop post the earnings. We actually see, for example, that it did pop. So far, a good sign that we're not kind of getting that right shoulder. We're kind of not getting that to be equal. We did make a shorter term higher high on Costco. Okay? Won't say anything else on that. Okay? Now, one of the areas, speaking of financials, right? If we look at the financials in general, the financials, pretty good push down here today. Now, we might even look at this and kind of say, is this head and shoulder like? Run up, head, okay, run up. And this kind of has like a tilted neckline, if you will. So a little concerning for the financials, okay? We did on Wednesday in the paper trade account, which we talked about on Tuesday, setting a stop or setting a conditional exit on V. V for Visa was triggered out, okay, on Wednesday. So what happened Thursday and Friday didn't matter. Okay, on Wednesday, from what I saw, that was stomped out. That was the trade follow through from Tuesday. So kind of an ugly day here for some financials. Now, let's kind of go back to one of the questions on Meta, okay? Now, if you look at Meta overall, what you're going to notice is Meta, yeah, it popped up, fell back down. Today, a pretty volatile day. The range on Meta was like $32. Now, speaking of that, okay, it fell down to this horizontal line, this 600, okay, and then pushed back to the upside. Tell me what the candle is today. What do we see? Well, we see the intraday low near the horizontal support, bounced up, okay? Today, where we finished, bullish engulfing from yesterday. That's a start. Is today a close above the high of the low day? No, it's not. But on Monday, an investor might say, James, I saw this being a bullish engulfing. The investor might say, I'm looking for this to gap up on Monday, okay? Could it gap up, and could it maybe even close on Monday or Tuesday above the Thursday high? So this would kind of be more of like a classic bounce setup going into, let's say, next week. Now remember, we call this a down day, red candle, up day, okay? But the up day is not closed above the high of the low day. Why? Why is it not cold? Because it didn't close above yesterday's high. It just was up. I call it a trigger. It triggers. The gap is looking for it to open up higher than where we close today. Now, let me kind of speak to this for just a second, okay? If we set in this paper money account, now remember, we are the idea of the paper money account right now is to do defined risk. Now, if we kind of see a situation where the markets are a little unsettled, there's nothing wrong with saying, look, maybe the investor says, I normally sell puts that are, for example, maybe a delta of 30 to 40. But this is where we kind of like understand things that's a starting point, but it doesn't have to be always. So if we see kind of the market a little bit more undecided or neutral-ish at best, we might say, you know what, James, I'm going to go down to even a lower strike than that. Maybe the investor says, look, I'm going to sell something like the 570. We'll do this. We're going to sell the 570. Why did you pick the 570 over the 565? Just looking at the open interest, those differences there. We're going to right-click on the bid price, sell, and we're going to go right to where it says vertical, okay? Now, when I go sell vertical, now this is, I'll repeat this, why do we not have that many stock trades? Well, if you do stock trades, you got to have typically stronger trends, okay? If we do not have stocks above moving averages, that's kind of tough to do a stock trade. Because if you did a stock trade, you have a higher amount of capital and you have a higher delta. So to start the year, the bulk of the trades, probably 80+% of our trades, are defined risk. That's not random. That's not because we like those better than stock trades per se. We're saying we just want trades where there's a defined risk and a lower delta. Okay? So you need to understand that. Selling the 570, buying the 565, $1.40 credit. When we look at this max gain to max loss here, okay, $1.40 maximum gain divided by 360. And so what I'm looking at there is what the ROR is. Return on risk. Return, potential, 140. Risk, given the vertical, 360, gives us a percent. It's 38%. So we can go a little bit farther down the table because the implied volatility is 44%. Now, you got to remember something. With many of these companies coming into earnings, the volatility is going to be a little higher, okay? Now, with that higher volatility, the investor might say, I'm going to even try to do something lower down on the strike table, so to say, and try to be a little bit more conservative. When you do that, you don't get as much of a credit, but if that credit relative to the risk is still a percent that you like to see, 25, 30% plus, maybe for you, you might say, hey, it could still work out. Now, it's also getting a little help here because there's 42 days to expiration. So trade number one here, example, okay, is doing a short put vertical on Meta, okay? Now, I want to kind of give a heads up. I've kind of created a little calendar for myself, okay? And so I kind of like on my calendar, I write down the trades that we take on Monday in the paper money account, not a recommendation, but examples, Monday, Tuesday. So I'm going to always kind of see, like when I'm teaching a class, when did we put these trades on from a calendar perspective? On Monday's class, I'm going to kind of relook at some of these trades that we did. Could they have filled? Okay. Or did they gap and so on? Did they fill and so on? And we'll bring that up next week. But I want to kind of make sure, especially in pockets of volatility, that we talk about some of the recent orders, okay? Now, the other thing I want to kind of bring up just briefly, coming kind of some other stocks that have kind of bucked the trends of the market is ISRG. Speaking of another healthcare name, little double bottom for ISRG, firing back to the upside near the high of the trading week. Now, those stocks in that space like United Healthcare did go up to an intraday high. We talked about this intra-week. I believe it was Wednesday. Little push here today. I think we talked about on Wednesday. It was at 513-ish. Intraday, 534. Closed at 520 or so coming into earnings. The other one we talked about was CAH. That's another one we're kind of saying from a relative strength standpoint has done maybe a little bit better than some of the other healthcare names. Now, the one that we are going to keep an eye on, we had CES this week, a lot of new technology coming out. NVIDIA CEO on the stage talking about some new products, talking about technology. And that a lot of times can kind of be things that drive prices up and or down. Micron has done a pretty good job holding that trend. It fell down pretty aggressively, but that's kind of the one we got to ask ourselves, is that making like a higher support going into the potential channel to next week? So that's one that's not ending on the low of the week. Now, as the NVIDIA CEO talked, you're going to see that there was after he got done talking and kind of laying some expectation, very wide or tall candle on NVIDIA. And you're going to see kind of like a push down after that. That's going to be something we want to see, the technicians want to see. Can it really hold 136? Okay, which is right back down to support. That was not a positive for the week. Wanted to see that hold a little stronger. Google is still holding the bottom of the diagonal line of support. Like NVIDIA, you liked where it was 2 days ago better than where it is today. All right. Now, you got to remember, we had the Fed minutes on Wednesday, and you're going to see that kind of pushed some stocks down from that discussion. And if you take a look at that, as we go back here, falling back down to that diagonal support and getting maybe trying to, we'll have to see what happens next week. It's holding the trend line. Some technicians might like kind of the big pull, still in that triangle, but definitely needs to hold here, okay? Now, if you watch, let's say, utility stocks, okay? The one, you had Constellation Energy this week that bought another company, okay? And the stock normally doesn't have this reaction, but CEG kind of seems to be like a completely different stock, okay, compared to its counterparts. And that actually had a big pop here today. Keep an eye on that. That was a continuation pattern after buying another company, okay? Now, I also want to kind of wrap up with a couple other stocks here that might be, let's say, that kind of like they're a little unusual. Number one is a company called Deck. And we used to talk about this company, Deckers Outdoor, for it was a long time ago, probably 2005. okay? 2004, okay? It depends on where you live, okay? Deckers Outdoors, okay? And if you look at Deckers Outdoors, that's like one of the few stocks in that space that hasn't even gone down. Matter of fact, it's almost near the top. So why do we do this? We're kind of saying when we hit pockets of volatility, what is still holding up quite well? What does that maybe mean? Well, those who have the shares might not want to sell them. Now, if they don't want to sell them, it actually kind of maybe creates some higher support levels. If new investors or current investors are trying to buy, those pullbacks to shallow support areas might cause some investors to maybe try to get in, okay? So keep an eye on Deckers Outdoors. Maybe it's a little bit more of a stock trade, perhaps, for some investors, because when you look at the options on that, historically, they might not have maybe super liquid options, couple hundred on the open interest, nothing outstanding. Historically, it's been one of a potential stock example because the options just not super liquid. Now, let me kind of wrap this up. I'm going to go to questions. On the UAL example, we had a target at 110.91. It pegged 110.92. Does that guarantee that it sold out the target? No. You have to get it to go up to there and make sure that your order was one of the ones at the top in the paper money count. Now, what you're going to now notice is it went up to that and someone, okay, sold it down, closed it off the target. So there might have been other people out there that had a similar target. But UAL bombs away, okay? A super bullish trend. But this kind of also goes back to, can the economy be that bad if the United Airlines is actually that strong? And it wasn't just UAL. It was also its brother, Delta, that's also getting a little push here to the upside. Now, Delta had the earnings, 185 on the earnings, and a little pop. So the estimate was 175-ish. The actual is 185. And the forecast, which we need to understand, it's not just about did they hit the numbers. What did they say about the forecast? So when we say forecast, we're talking about the next 4 quarters. Or do they even give a forecast? Okay? Or do they withdraw their forecast, right? If a company doesn't even give a forecast, man, like now by the way, some companies don't, okay? That's not necessarily horrible, but I think most investors would like to kind of see something where they have an idea of what the earnings might be. And it's up to the company if they want to actually give the next 4 quarter guidance, okay? So I want to kind of just say one more stock here, and then we're going to go to questions, okay? If I look at, let's say, one more stock that we actually saw a pretty strong move into the tail end of the week, it was Vistra, okay? And on Vistra, what we kind of see is that cup-like pattern, little run-up, pull back. And if you look at the pullback, you're going to kind of see tail, tail, tail. So remember, when people are buying at and or near upward trending moving average lines, someone clearly thinks they have enough ammunition of capital, or other investors might see it themselves and try to buy as well. That's the idea. Have to see what happens. But if you go back to kind of what we see going into, let's say, next week, you're going to kind of notice that overall, kind of like a potential continuation setup on Vistra. What type of volume does this have? Well, if you go to this, it has 9.5 million shares. You can't say it's a lightweight, and it's hard to really kind of notice that overall, like what's the bid-ask spread in the options. The market's closed here, but some of these strikes, 150, 145, has more, and these 160, 165 has more as well. So we're thinking that if the market was open, those spreads should probably be a little tighter, but I have to watch on Monday to see where it's at. So what I want to do is I want to kind of take a look at some other questions here, okay? Any other questions? Okay, I'm just going back to look at this. Now, by the way, if there was a question that Brent maybe has not hit, let's look and see, for example, if we could discuss it, okay? Now, RH says I bought DEC at 135, okay? So you kind of just talk about it in general. So one of the things that was kind of brought out there is maybe a product that they actually sell, like shoes. And maybe for some people that maybe have arch issues, perhaps, or inflammation on the feet, okay? Maybe Dick's Sporting Goods or some of these shoe stores sell that product. One of those products, Hoka shoes, not the only shoes, okay? Sold at Deckers Outdoors. Now, if we go to, let's say, or maybe Dick's Sporting Goods, if I go to Analyze and we go to Fundamentals for just a second, okay? If we wanted to kind of see, let's say, what do they actually do? Well, you're going to see that one of the comments that was in the chat was distributes footwear, okay? And it says offers premium footwear. What does that even mean? UGG brands, okay? So we know those are probably not like thongs, like in terms of like flip-flops or sandals, right? We're talking about a little upper end there. And you're also going to see that maybe some of you mentioned there's the Hoka brand, which was mentioned, which that's why I went here. And also Teva, or some people call it Teva, okay? Now, the one thing you're going to kind of notice is here, when we talk about these trends on earnings per share, okay, dividends, some of you like dividends, sales, ROE, net profit, operating, gross profit margin, really in the last fiscal year has been quite solid. Okay, so keep an eye on that. The other thing kind of here real quick is when you look at the debt to the capital, they actually have really dropped the debt quite a bit and actually is kind of in an interesting financial position. Okay, so for some people, they like to kind of see the debt drop. If the debt drops, they don't have to make interest payments or less interest payments, which could increase the earnings. You increase the earnings, you increase the potential valuation. Okay. And obviously going forward is, can they keep that growth going? So all we're saying is just keep an eye on. Now, by the way, we might also kind of wonder here, is it just Deck or is it maybe Dick's Sporting Goods? Now, I don't normally look at Dick's Sporting Goods, but if we did DKS, you're going to see a similar trend, but it's just not as strong as Deckers, okay? Now, I also might, now I'm not trying to be funny. I'm just saying flip-flops. That's what we call them. Okay. Yeah. Thongs. We call them thongs in upstate New York. Thongs, flip-flops. Okay. All the above. All right. Now, any other questions there? Now, I was not trying to be funny. That's what we call it. Like thong, flip-flop, thongs. Okay. Now, if we take a look at this, when we go into next week, okay, one of the things I think is very important to really see is we need to see some stabilization in the sectors. Okay. Remember, we need to see breadth. And the biggest thing is when we look at, let's say, where we saw, let's say, today, the tech space, which was down 2%, and I'm going to also include discretionaries. It is very difficult to get a bottom if you don't get those two areas showing some buying in that space. Those are the higher beta areas. They're the areas that are a little bit more volatile relative to the S&P 500. You want to see proof that investors are comfortable to get in those spaces, okay? And that they would be buying some of those stocks. Now, Netflix was pushed down. The one stock in discretionaries that I would say kind of keep an eye on as well is Tesla. You could almost say that they maybe pre-announced a little bit the earnings or the numbers going into the earnings. That stock was not down that much. So keep an eye on that one as well. Not a recommendation. I'm just kind of saying some unusual action given what the indices did. Okay. So I'm out of my time here today, but those are kind of some of the ones that I wanted to kind of share here today. And I'm glad you thought that was funny, but I wasn't trying to be funny. Now, the other thing that we do need to make mention, David always saves us. Okay. When we talk about going into next week, and we look at the economic data, are there any kind of potholes that we should kind of be watching for and not drive the car right into the middle of the hole, okay? Well, the one thing is kind of want to point out here, when we look at this, is we got core PPI, Producer Price Index. That's on Tuesday. So we want to kind of know the inflation of what the producers are paying. Coming into kind of more what we look at is CPI, core and CPI. Now, remember, if we kind of see that these numbers are still elevated, that's kind of like just the inflation is not as tepid or tame as what the Fed thinks. So those would be some numbers, the PPI and the CPI, definitely things to keep an eye on. You want it to be no higher than the forecast. If either of those are hotter than the forecast, the Fed is actually saying we maybe cut the rates too soon, and or we're probably going to need to keep the rates up higher for longer. And for some investors, that might create maybe a potential in some of those fixed income areas. Keep an eye on that, but that can be a headwind for some areas. Now, also, I just kind of want to take a look at anything else. No, the only thing I would say kind of going forward, retail sales, sure, okay. Building permits, housing starts, but that's the back end. But I think the biggest things going forward that I would concur with David, the PPI and the CPI Tuesday and Wednesday. If you think that these numbers have nothing to do with your stocks, I gently push back, and they matter, okay? And we'll try to pull out those things that kind of really matter, talk about them, and kind of point out the things week to week that investors are probably really looking at, whether you're an equity investor or you look at fixed income, okay? With that said, I'm out of my time here today. It's nice to be with you for my first webcast of the week. Joking, okay? Some of you know what I'm talking about. All right, so this is what we wanted to do. I think we did that. We talked about some things from a macro perspective, performance perspective, technically and fundamentally. Also, remember that when we talk about examples, it should be kind of practice in paper money, at least in the paper money account. Practice some bullish and bearish positions. Get comfortable with different types of trends. We can't always assume that the trends are going to be up, okay? Now, also remember that all investing involves risk, and also remember that this has been the class on market movers. Ben Watson will pick this back up next week as he is in town, okay? So I've been covering for him for the last 2 weeks. Thank you so much. Have a great weekend, okay? There's also a survey in the chat if you could fill that out. Thank you in advance, and thank you to Brandon as well. We'll be back on Monday. I'll kick it off on Monday. Take care. Bye-bye.